US Federal Reserve officials did make some comments. Governor Michelle Bowman, he's sounding the alarm on inflation, saying it's still the top economic concern. Despite recent rate cuts, Bowman believes prices are rising too fast and the Fed should not cut rates until inflation meets the 2% target. However, other Fed officials like Susan Collins and Lisa Cook, they think more rate cuts are on the horizon as inflation cools and the labor market remains robust. Collins emphasized the Fed's shift towards a more neutral monetary stance. With inflation pressures easing, the Fed is expected to move away from its restrictive policy to align better with the economic environment. Cook also mentioned that wages as well as the job market are cooling and excess inflation is largely confined to housing space now.
Right, some important commentary coming in from US Federal Reserve officials, more commentary that is on the deck as well. But moving on then, Nvidia's AI-driven boom continues. The chipmaker crushed expectations in the third quarter with revenue soaring 94% on a year-over-year basis to $35 billion, fueled by demand for its next-gen Blackwell AI chips from big names the likes of Microsoft as well as OpenAI. The company also expects the fourth quarter sales to surpass $37 billion, implying a 70% growth coming in those sales. However, you did have shares dipping in after-hours trading on valuation as well as future growth visibility concerns.
Okay, keeping it with the earning only, it's a tale of two retail giants now heading in opposite directions. Now, Walmart, that one has hit an all-time high after reporting strong quarterly numbers with same-store sales up 5.3%, and even the e-commerce business, that one has surged by 22%. The retailer is gaining traction with higher income shoppers as well as non-grocery sales. Now, this one prompts it to raise its full-year forecast. However, Target, that one tumbled to a 52-week low after missing earning expectation, cutting its outlook. Target blamed cautious consumers, inflation fatigue, and even the higher costs.
Alright, then moving on. Meanwhile, Europe's auto industry is facing a crisis as Ford and Volkswagen announced sweeping measures to cut costs. Ford plans to slash 4,000 jobs in Germany and the UK, blaming weak EV demand, limited government support and competition also from subsidized Chinese rivals. Meanwhile, you do also have Volkswagen workers that have offered $1.6 billion in concessions to avoid factory closures, but tensions are high as management considers deeper cuts to stay competitive.
If you like this video, then like, share and subscribe to ET Now.